Okay, so welcome to Sunday night market prep. Thanks so much for joining today. I am starting a little bit late because I started to have some issues with OBS, but those are now fixed now. And the audio should be fixed now, so I'm really hoping that the noise from the fan is no longer an issue. I apologize. I might actually re-record that other video because the sound is so bad. But hopefully this sound is not too bad. So let's get into market prep tonight. We're going to take a look at the entire, we're going to stay disciplined, go monthly down. So you go from higher time frame to lower time frame, see how I look at things. And then we're going to take a look and see what happened throughout the week. So let's cut straight to the chase. Over on the monthly, so what I'm going to do is I had some feedback asking if I can take away or have a clean chart rather. So I noticed that I have the ability to make things less visible. Unfortunately, that also means that across all my charts, any higher time frame lines will no longer appear if they are on all charts. So let me show you an example. So here we see that this line is on the monthly, and if I wanted to show it on all charts, I would put it there. Same here, this rectangle is on the monthly. If I wanted to show it on all charts, I'd also put it there. Now, if I wanted to show it only on the monthly, I would show it here. But the problem is many of these have all charts selected, so they are going to show up on all charts. So I just ask that you bear with me on that because these key levels are key levels for a reason. So let's continue. So on the monthly, remember we're looking at any red line is a monthly. So what I will do is take those drawing objects and temporarily remove them so that I can point out a couple of things. So on the monthly, we've kind of like dug up into this imbalance and then rejected. Now, the problem is yes, we did go down into this imbalance, this buy side imbalance, sell side inefficiency, and we kind of like jumped up here. So we're in the middle of a really weird area where it could go and take out, like it traded above this once, but it didn't close all the way through it yet. So it's not a completely balanced item, a gap rather. So I am curious if it's going to bounce here, create a short-term low, and then continue upwards on the monthly, or if it's going to come down here and then we're going to see some candles start to try and take that out and go down for this deeper buy side imbalance, sell side inefficiency. I can see it going both places, and we do see that this monthly order block is here as well. Technically there's this one as well, but it's not a very large candle, and I like to use the top of a thick candle for that. So this is the lowest one that I would be looking for. And if we hit that and we hit the middle of that, it's going to continue further down. So yeah, that's where we're at on the monthly. So I'm going to bring all those lines back. So you see that within this sell side imbalance, buy side inefficiency, we kind of like hit it and then reject it here. So let's zoom in on that just so you can get a sense of what that actually looks like. So remember this SIBI high and this SIBI low, I have it documented that we touched it and retraced. That's what that TTAR is. So remember, this is the past month of August, and the past month of August traded all the way down here and then traded back up, closing there. Now September started up and started to expand down. Remember, we are in the second week of September of the month. So 4 weeks in a month. So we went up and then we started down. And now we've kind of like gone down and then retraced a little bit. So my conjecture is that for the monthly chart, we are still aiming further down. We have these buy side, or these we have this sell side liquidity to continue to take out at some point in the month. Yes, it's possible we just go up and, fill in the rest of this SIBI here and then continue to go for this breaker. But I'm hoping that on this monthly, we continue to expand further down. It is in this middle area, so I'm kind of like weary of where we are right this moment. So you should be weary as well. Not saying you can't trade, but this is uncertainty right there. So outside of these, we see that the monthly has gone down to this breaker low and bounced there. So we don't know. I mean, that's a lot of buy side still, right? So very curious to see what happens there. And that's on the monthly. So right in the middle, we need a little bit of time. We need to understand what price is doing right now. And right now, being in the middle, you don't want to be a gambler and taking trades that you're not very much so securely, confidently thinking that it's going to go in one direction. Those are the kind of trades that you want to focus on. So let's go down to the weekly now that we can't see too much on the monthly. We do see this sell side liquidity down here. So I'm eyeballing that. And then, of course, this sell side liquidity up here right before the unfinished breaker. So if we go above that, though, so I'm going to zoom out a little bit. If we go above that breaker, and there's this monthly rejection block here too, but if we go above this breaker, we're probably going to go all the way up to this premium order block and then create another intermediate term high potentially. So with that, let's go down to the weekly, since we can't tell too much from the monthly here. And what I'm going to do is I'm going to zoom out a little bit so you can see on the weekly chart, these same monthly levels are there. The yellow lines, or rather the orange lines, are weekly lines. Yes, there's an untouched SIBI high, and I'm going to mark these as untouched so that we can know that on the lower charts that when we hit them, we have not touched them just yet. You don't have to label them. It's just something that I'm going to do. So let's take a closer look at this segment of price action that occurred in the previous weeks. Okay, so we see that we traded up into that monthly SIBI and then started to trade down. We created there's a short-term low. So higher low, higher high, higher low, higher high, lower low, lower high. If this next week remains, my bias, and let me see if I can show this a little bit better. You can't see it because of this, but see, this is the current week over here. We see that this short-term high has now created a lower short-term high. So I would deem this to be a market structure shift. Yes, it can go further up. I don't want it to, but I think that it's very possible that it could. But yeah, let's take a look into that a little bit further. So my bias is still bearish. Usually seasonal tendencies in September seem to be more like first half bullish, second half bearish. So if the first half of September, I mean, you can see this first week here, right? So I don't know. I mean, it's not super bullish, but maybe it turns out to be. But I am looking for this to continue downwards, taking out that low, and then maybe aiming for this volume imbalance. So on the weekly, what else do we see? One thing to note, if you remember last week during market prep, I pointed out this weekly wick consequent encroachment. And look at what happened here. It didn't touch that. It did not go over that. If it went over, remember, if you go back to a couple lessons ago, if it went over, I was saying that we might go towards this buy side liquidity. So this one, I'm going to move this to reach out to September 30th. Give it a little bit of room there. I don't believe we're going to come for this. So I think that we rejected here, and now we're going down, passed through a previous new week opening gap, went all the way down, and then came back up. So right now, the beginning of the week, we're starting with an expansion. So this leads me to believe that we could find our expansion lower this week still, because these signatures in the beginning of the week, if you look at the power 3 concept where every candle has an open, high, low, close, for the weeks which are bearish, you see that price opened, went up, came down, and then closed bearish. So I am thinking that the same thing is going to occur, and that will be my bias until I see otherwise. So on the weekly, we see that it definitely went through this premium bearish order block that you can see on this up close candle before a down close swing. This up close candle here is a premium bearish order block on the weekly. There's no real other signatures within this price action that lead me to believe that there's any weekly sort of draw, except for this volume imbalance down here. So that's why I think that this weekly draw, if we are bearish, I think that this weekly draw will draw down to there, eventually heading down to this monthly premium BISI low that we haven't touched yet. So yeah, that's my bias here, because I see this monthly BISI being untouched. I see that as being a huge area of liquidity that is just waiting there with that volume imbalance in there. So that is why I'm thinking that we will go lower this week after going up the initial day or two. So that's it on the weekly. Let's head down to the daily. All right, so on the daily, so zooming out, you're familiar with this chart. I think that there's only so much data because of the contract. So even if I put 800 days, there's only enough to take us back to June's contract. And that is the nature of futures. There's different types of contracts there, and some of them will not let you see super far back. But that's okay. That's what these recordings are for, day by day, so we have them here. So we're going to take a look at the price action a little bit deeper here. And we're going to scrunch this in just a little bit so we can see some more. Okay. Actually, let's just look at this price action. You know where the weekly is. We know we've already talked about that. So let's take a look at these candles here. Okay, so remember, the week started here last week. Last week we went up to Monday, Tuesday, or rather Monday, Tuesday, Wednesday, Thursday, Friday. So that's the week in daily charts. So what do we have on the daily side? On the daily side, we went up when we knew we had a daily bearish order block. We knew we had a one-day premium SIBI low, and the high was up here. We did not go even 50% of the way up through that any time beyond that first that last day of the previous week. We touched it, and then we did not go anywhere near that. So we in fact we went in a hurry away from that. So what do we have here now? So this is the daily chart. I can see that there was a premium inversion fair value gap here. So I'm watching that over time. Why is it an inversion fair value gap? Well, it has traded up, and we've seen a body close through it as well. So that price range is now balanced. When I see it trade back up to it, I might consider having this extended out this week in the event that we trade out to it, because I want that on my lower time frame charts so that I can see when it trades up to it if it rejects or if it continues and blows straight through it. So I think that what we'll do is on the daily, we have that inversion fair value gap, but what formed during the week on the daily chart? You see this sell side imbalance that formed? I'm going to extend that into this week as well, because I want to see those higher time frame levels on my lower time frame charts. So I've got that there. And we do see some of these here. I want to leave those on briefly, because when we get down into the hourly, you'll see what these refer to. And then I'll take a look at then and see if we want to remove them or not. But yeah, so we created this sell side imbalance, buy side inefficiency. And after that, we traded down, down, down. We had a premium 1 day BISI, consequent encroachment. So the midpoint of it, basically, from this low to this high, what was the midpoint? 15,243. So we ended up trading way down here. We didn't fill out that entire BISI, but we traded back up. We traded back up, and we never saw a candle respect this premium BISI equal, like, midpoint, the consequent encroachment. So afterwards, we kind of wicked up, wicked down, and then that was it on Friday. So on the daily, where do I think it's going to go? Well, we see this high from the previous day, and we see this premium SIBI that we've got on the daily formed, right? I think it could certainly draw up there in the beginning of the week. It could go a little bit higher as well and hit this inversion fair value gap and then reverse. But I'm also wary that these were pretty strong buys. So I'm keeping those daily levels. You see that sell side liquidity? Oops, let me see if I can zoom in a little bit further. So this sell side liquidity here, we're going to also bring out to the 15th. And also this one down here, we're going to bring that out to the 15th. So now we have those lower side points of liquidity. I do see that we failed to fill in the rest of this buy side imbalance, sell side inefficiency. So if we are expecting a bearish week, where is the draw that I see? Well, it'll be the bottom of this 1 day premium BISI low. We do have the midpoint of this bullish order block on the daily, this big black one before a rise up. However, we did not see, I mean, it'll be interesting to really see what happens here, because this candle, or this week's candle price action, could just rip up as if it is respecting this bullish order block, or it could reject the daily SIBI that we saw up here and continue downwards and fill out the rest of this daily buy side imbalance, sell side inefficiency here, and then continue downwards and take out this bullish order block mean threshold. If we do see that, I would expect for it to start to aim for this nice juicy monthly premium BISI that's untouched, and more specifically this volume imbalance here. Remember this is a weekly volume imbalance. You see that here. Those are my draws that I like, that gun to my head. If somebody had to force me to say, hey, this is where I think the price is going to draw to, that's where I'm looking to, is a rise up here and then an expansion lower to continue. Because, and the reason why is that on the weekly, if you recall, we had created a higher low, higher high, lower low, lower high. Now, when you look at the daily, you can kind of see higher high, lower, higher low, lower high, higher low, higher high, higher low, then a lower high, and then it goes all the way down here, lower low, lower high, lower low, higher high, higher low, higher high, higher low. So you can see how it seems like there's a mini market shift here, which is why I want to trust the weekly a little bit better. I'm okay with being wrong. I can certainly see it going up as well, but that's why this particular week, you need to see it trade out of this range here. You have to. For you to have a high probability trade, you have to absolutely make sure you trade, make sure it comes out of that range. Otherwise, you have to be very, very nimble. You're not going to see some massive expansions without proper bias. Now, that's what I see on the daily. And one thing I want to also bring up is, let's take a look at the economic calendar before we go down into the lower time frames. This week, we've got nothing on Monday. We have a core CPI number coming out on Wednesday, which is going to be huge. This is going to detail where that weekly expansion goes, or where price action is going to get to in a hurry. And then we have PPI as well on Thursday, big, and unemployment claims as well. And then Friday, we've got Empire State Manufacturing, followed by preliminary U of M consumer sentiment. Those tend to give you a little bit more volatility. And so you're going to want to watch out for these, like these time frames, right? Like, you're not probably trading at 6 a.m., but 8:30 a.m. on Wednesday, probably want to be careful, right? 30-year bond auction, 1 o'clock, 2 o'clock, federal bonds balance budget. So these are all things that you want to pay attention to on forexfactory.com. So let's go back to the charts now. All right, so we have here on the daily, I think that's really all we covered now. You can see how it's really hard for me to say on the daily which way it's going to go, because it's right smack dab in the middle. So if you take a look at the dealing range, let's say the most recent swing low to recent swing high, you can see that we went down to this 50% level already. So that would be a valid retracement if we were to go up further, right? Now keep in mind, we are in a downtrend right now. On the weekly, we did break structure here, and we confirmed it here. If we end up breaking structure again to the upside, this is the range that you want to really watch for, because if we keep on breaking this to the upside, then this could mean continuation to go for these higher ones. What we would like to see is this sell side broken so that we can continue downwards. So wait until midweek for the ones that are studying, or just look at price action as I record it, because I'm not going to be here on Tuesday and Thursday. I'm going to record the price action, but I won't physically be around my computer. I will go live and record it though, so that we can come review it in the evening, and I will be reviewing it in the evening as well as I do my pre-market preps. But yeah, be careful in the beginning of the week. Make sure you don't try and trade and gamble or guess. Look for institutional ownership of that, okay? So let's go down to the 4 hour. Hey, Desi. sorry I missed you. Hopefully it wasn't too long. Hopefully it hasn't been too long since you were watching. But yeah, let me know if you have any questions. Happy to answer anything for you, buddy. Thank you so much for coming. All right, so we're down at the 4 hour. Now, you're probably thinking, man, this is a lot of work. Yes, it is, but it's going to help you if you get into the habit of doing this every week. It's not too much. It's not too bad once you get into the hang of it. But yeah, you know. So let's go down to the 4 hour now. I'm gonna get rid of this here so we can see some more. Okay, so 4 hour. What has been respected? Let's give us a little bit more data here. So you can see it's still respected. We've created a lower low, lower high, lower low, lower high, or higher low, higher high. So this is a 4 hour shift here. Does that completely blow away the weekly one? No, not yet. But again, you're in the middle of this range, and this range too. So this is not high probability trading conditions. So when you are in these conditions, you want to be scalping. Take your 10 points, take your 20 points, and make sure you're taking profit, because these can reverse pretty gnarly. I mean, you can see what happened down here, right? That was a very tough one here. So on the 4 hour, we see that this whole range was traded to and bounced, right? That's a 4 hour area that has bounced, and right now price is still wondering if it's going to respect this bearish breaker here. So a bearish breaker is where you have price go down, go up, make a lower low, go back up to this breaker here, which is on a lower time frame, and reject. So far it has rejected, but keep in mind on the daily we have some other targets right here, right above this segment here. So what I'm looking for, if it will trade up there, I'm looking for it to wick up and then come down. If we start to see candle closes around here above this previous new week opening gap and above and into this daily SIBI high and low, then I might need to change my thesis a little bit, because then we're now reaching for we're looking to see how it behaves if it gets up to this inversion fair value gap. That's about the highest that I would expect price to travel if it were going to go be bearish and in the first part of the week trade up. That's a lot of upward motion. It's very possible for it to go there. So you know, stay nimble until Wednesday, I would say. And then after CPI hits, then you'll probably get a direction of where the week wants to go. If you don't get a direction by then, if it hasn't traded above any previous highs and it's still dawdling around the middle, you know, stay nimble. Don't stay in trades like an insanely long period of time. Okay, so let's go down. So that's what I'm seeing on the 4 hour, that we've actually, you know, broke market structure and are continuing upwards a little bit for the first part of the week. Let's see what the 60-minute, the hourly looks like now. Okay. So we're looking at the previous week. Let's show a little bit more price action there. So you can see on the macro scale, we've traded down, back up, and now we're kind of like this might be part of a leg up here, a really wide range, or it could be a movement down, movement up, and then the beginning of a movement down. So This particular week, again, very unclear. Let's take a look deeper at the hourly. So remember, the previous week started here, traded up, expanded downwards, and ended slightly up. So we're going to see if continuation occurs. I could see, let's expand this a little bit. So we can see that price traded up to here, right? Price traded up to here on Friday and rejected. So what's left up here? We have a rejection block at 15,398, a previous buy side liquidity at 15,404.75. Those could all be easy liquidity grabs for price to go up in the beginning of the week and kind of like tap that. Given that we've got a very large economic event on Wednesday, I could totally see this trading up here and then wicking up into this wick fair value gap and then coming back down. Now, I'm going to let price dictate what happens before Wednesday. You want to be done trading by 7 a.m. on Tuesday if you're going to trade later on in the week, because you don't want to get caught in the choppiness that happens before CPI. So there is buy side liquidity here that needs to be taken before you can go further down. On the downside, of course, you see these. We reached these sell side liquidities before. That's 15,157.50. And this one is the sooner one. And on the hourly, there's even this one, this rejection block here, and this short-term low. So these are ones that I want to mark on the hourly. I want to mark that this is a rejection block here. And let's make that sell side liquidity. Let's make that the opening of this 15,270.75. And we'll see what price does around that area, because if it hits that and rejects upwards, that's a telltale sign, right? On the hourly at least, because we are in a slight uptrend here. Very slight. So I don't expect it to bull run, but again, markets have chosen something different. But right now, it's right in the middle. I don't trust any direction, but I also am not confident in any direction, right? So that's what I see on the hourly. The 15, let's go down to a 15-minute. Okay. So this is the 15-minute each day of the week, the past week. Sorry, my nose is like kind of sniffling like crazy. Gonna have to blow it in a second, but yeah, so this is the previous week. Remember, we traded down and then finished up. So with this week, you can see how on the lower time frame we're still in this kind of like range here, and Asia has done nothing but range as well. So I think that there's not much to show until we break this high here. I want to see us break above this golden square box. This is the breaker that I was telling you about. I think that this shows up, believe this shows up on the hourly. There's a big black candle that registers as. And yeah, I want to see it trade above it and then show some strength if it's going to go bullish. Let's see what happens in the beginning part of the week. I'll add a new week opening gap here. It's a very small one, but I will add it nevertheless. And let's do that right now so you know what I'm talking about. Take one of these. And we are going to zoom in on this so you can see it. Okay, so if you see here, 9/8, 1700, 9/10, 1815. This is the new futures open from 5 p.m. when markets closed on Friday to 6 a.m. or 6 p.m. on Sunday before markets start. That is what this level is. So I'm going to put these here, the close on Friday, the open on Monday. So close is 15,313. Oops, what happened there? And then let's make this the open on this one is 15,308. Okay, so we have this new week opening gap. Watch this throughout the week. If we see a lot of trading above it in the beginning, then this might indicate that, hey, at these higher time frame objectives here, remember the purple's daily, and this is a previous old new week opening gap. Let's see what price does as it trades here, 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 and then ultimately up to this inversion fair value gap, which we would expect since price is balanced. Go back and look at the daily chart section of this chart, of this video. Because it's balanced, we would want it to see it trade up to it and reject instantly because there's no more price up there. Price has been taken. All the buys, all the sells, they've been taken already. There's no draw to take that higher at the moment. In fact, there's many more draws on the sell side that have not been taken. So a lot of people on the sell side liquidity, and why do they call it sell side liquidity? Well, because people who are buying here, when you go below that, retail puts sell market orders, basically a sell stop. And what would new longs like to do? Well, they want to buy where there's liquidity. So there could be longs here that buy here, here, and here, and here. Will that happen with CPI on Wednesday? That I do not know. But that's one thing that I'm looking out for. I'm looking out for this to go up first, take some of this liquidity here. Remember, there's a lot of stuff that is sitting up here waiting to be taken from a buy side liquidity perspective. So I would love to see it trade up to there and then reverse middle of the week. But that's gun to my head. That's what I'm looking for. And there were a lot of good plays in the previous week. I don't know if it makes sense to review those. I think I reviewed those every single day during pre-market prep prior to day of. On Friday, it was a really difficult one, but Friday you still had a few opportunities there. You just would have to look down on the 5-minute time frame, 1-minute time frame, and take a look and keep an eye out for some of the concepts during those sessions. On the 15-minute, you can't see very much, but as you chunk down and go into lower time frames, you see them hit key levels. So look at this 1533 daily order block level. So this is a bullish order block, so we would have expected it to trade through it, but instead it rejected there. So and eventually kept on getting bought up, and it hasn't really respected that since, but it did respect this premium SIBI low, this premium BISI high. This is all on the higher level time frames, right? So with what happens tomorrow, if you're new, I would just say watch price action during the day. If there's relative equal lows here, I might find price that goes down there, hits this, and take a long further, depending on if we're in discount at that time, which we would be of this whole price run. and then you could use the lower time frames to get in and get out quickly um, during this point in time where price were in the middle. So yeah, um, with that, I think you know it's tough. I mean, this is one of the tougher weeks right now because I don't have a bias. I can't see a clear bias, but gun to my head, I think we are eventually going lower in this week. We might go higher in the beginning of the week. Let's see how that thesis plays out. I will adjust on Monday if I see something different, right? As you should too. Each day, you want to be looking at the charts, see what formed, see what happened, see where imbalances are, see if you're in the upper half of a swing, which is like swing is like from a short-term low to a short-term high. So if you're in the middle of that, right smack dab in the middle, take some caution. Let price and institutions tell you and show you where they're wanting to take it first, and then ride along those coattails. So, so tomorrow again, going to be quite nimble. Going to look for any sort of evidence that we continue higher and take out and aim for these specific levels. So that's what I'm looking for on Monday, Tuesday. Seeing some green there. Could it reject completely? Yeah. And take out all of these? Absolutely. But I have a feeling that they're saving that for CPI. So, but, who knows? Let's see what the market does. With that, I think that is it for tonight. I know this was a little bit longer one, but the weeklies should invest a little bit more time in the longer ones because it is what forms your bias for the week. And having no bias for the week right this moment is okay as well. That just means that you must be more cautious when trading. You cannot be trading with certainty that things will go in one direction or the other. That's going to be gambling before institutions kind of like tip their hand at you. So, I think with that, let's go back. Want to just thank you very much for, if you've made it this far, want to thank you very much. Appreciate the subscriptions. I apologize to the dude that asked for a clean chart. I really wanted to find a way to do that for you, but unfortunately, there's not a easy way to do that unless I zoom in. And even then, it's not that easy for you. So, it's cleaner on the lower time frames, and you can actually see the higher time frame values on the lower time frame, which is what I would want to see before I use the lower time frames to enter. But yeah, I mean, I really wanted to be able to cater to that, but I cannot, unfortunately, because it's important to have those higher time frame levels on your chart. You have to have them. You don't have to make them big filled in boxes or anything, because otherwise you're not going to see anything on the lower time frames, but you can certainly make them lines and label them accordingly well. I do that. Some people write down the levels on a piece of paper and they look at their piece of paper each day and every tick. So I don't want to do that. I'd rather you just have the levels on your screen perpetuated across any time frame that you're looking at. So that's what I would recommend. I know it can get messy, but with the proper color coding and usage of horizontal lines, it will be much clearer to you. And you can do this on anything. You can do this on NinjaTrader, which I'm using right now. You can do this on, you can do this kind of movement on Tradeovate and TradingView as well. I'll say thanks to you, bro. I learned something new today. I still have a lot to learn, but slowly getting there. Yeah, then this is admittedly, this is like intermediate level, and after many thousands of hours just studying stuff. I think I replied to a comment for you, Dazzy Wolf, specifically. Check out Inner Circle Trader. It's going to start your journey in the right spot. I guarantee you this. You're gonna see a lot of people talking crap about him, but I guarantee you, if you put in the time with that and go slowly, take notes, pause, um, take notes, and maybe screenshots in a, you could open up your own Discord and be it just you and use that as your journal. Um, or you can use a pencil and paper. I have both. When I first started studying, I used pencil and paper, and that worked out quite well. It was just a pain in the ass trying to um, go tick by tick, and that was really annoying having to draw all the candlesticks. So I would recommend going to Discord, create your own Discord. It's free, and you can use that as your journal. That's what I do. There's a whole chock full Discord that I'm in myself that has a whole bunch of gemstones. I'm not gonna let anybody join that. Maybe in the future, but not right now. But yeah, so yeah, I think that's it on my side. Be careful in the first day and second day, and keep in mind Wednesday's CPI at 8:30 is going to be dangerous. I would wait to see what happens after the fact, see where prices tipping you forward to go, and just make sure you stay aware of the timings of those economic calendar events. So anything that's red or orange, typically if there's a time frame to that, 8:30 a.m., 8:30 a.m., 8:30 a.m., 10 o'clock a.m. Watch how price reacts during those times. Yep. And let me show you actually. So if you go to youtube.com/ I think it's at Inner Circle Trader. Let me copy this into this one here. So for you, Dazzy, I would recommend that you start, and I've gone through all of these. I've spent multiple times like having to pause, replay, pause, replay. Some of these videos are really long. Don't get discouraged, okay? Just believe that you can get through it and do it. So you're gonna have to go here into this playlist, scroll over a little bit. I think you'll find one that says 2022 ICT mentorship. 2022 ICT mentorship. So start there. This is a really great primer to what you need to know about price action. And one thing I would also do is look at 2016 Premium ICT Mentorship and 2016 Premium ICT Mentorship Core Content Month 2. This is just the first month. He just didn't label it appropriately. Look at these two as well, because they have amazing intro. They have amazing intro videos for learning how market makers think, how you should be thinking about price, and how you can also manage your risk and manage drawdown. We're always going to have some losing trades, but doing it gracefully and doing it calculatedly is really important. For instance, I trade NASDAQ with a 10 whole point stop loss anytime I enter a trade. And what happens is that means I have set rules as to what I will be willing to lose on a trade and what I'm willing to gain on a trade. So I have, yeah, absolutely. Yeah, you're welcome. And I love to mastermind about this stuff. I'm on Twitter at Johnny Lee Lin, same as my YouTube channel. I'm more active in terms of consuming information there briefly. But yeah, more than happy to, if there's any questions, just drop them in comments, and I'll try to tag them or at me at Twitter, and I'll try to make a video about it or something if I can. Yep, so I think that's it though today. Thanks so much for listening. If you made it this far, I'm gonna be watching to see what happens in the morning. I don't personally trade Asia this nighttime time frame. It moves really slow, and some people like trading on it and when they start because it moves so slow, because you don't want to get stopped out as quickly. So I've heard of people using this to trade, and you know, you can. I've traded it before. Sometimes it's very volatile, but I just personally, it's really hard. Just watch if you need to play Asia. Just watch how slow Asia trades versus New York Open, which is like 7 a.m. till about 10 o'clock a.m. So, yep. With that, I think I'm going to. I will call it a night, and it's about 11:02 p.m. Um, Thanks a lot for watching, and appreciate the subscriptions as always. Thank you so much. I didn't think anybody would even like value any of this. I just, for me, for the most part, because I knew I needed to record this price action, and so and watch it in the evenings. So thank you so much for watching, and I'll pop on live and record the live day of price action tomorrow, and we'll go from there. So have a great evening, get some rest. We'll catch up soon. All right, take care. See ya.